Hey, what's up, guys? I hope it's sharp. Nugget grant. Well, every time I make a video, it means there's something important that is worth sharing, ne? So today, Hakitsu, I just thought of this other concept or this other thing that I think it is worth your attention. Why one? So I hope by now you already know how to spot pin bars and which ones are significant, which ones we only pay attention to. Right? So now I want us to try and take that concept of a pin bar and see how we can trade those pin bars using a buy or sell stop. Right? So one thing that you need to understand, the main, this does not change the main thing here, the pin bars. Remember I said pin bars, the only ones that we can think of buying or selling them is those ones that are what? They must be located somewhere significant. I hope you still remember now those significant areas where we can think of executing the pin bars. So let's just remind each other, because remember there's a video that I made where I was explaining this. So those ones who haven't watched the video, just make sure that you sort of start at the beginning. All the videos that I put there, everything links together. So if you jump straight to this one, you might not understand some of the concepts, but they've all been explained before. So significant areas can be our support area or resistance area or trend line. So if for trend line, I think if let's say we're going down, we're looking to sell, the price has been doing this and they've been doing this, and then it comes here, it gives us a pin bar, we can sell. And that's what I mean, that significant area, at least it is located where at the trend line, it is being working, it is failing to take out the thing. We can see that the price is being rejected from the trend line. So if I sell, even if it breaks, at least now you know why I sold and where we were located. So these are the three areas where if we're seeing rejection structures or reversal patterns, that's when we can raise our ears and say, oh, this is something interesting that is worth my attention. Maybe I can get an entry here and trade that. So here, this is what I wanted to share with you guys. Let's say the price is going down, as you can see, the red color, and then we hit let's use a black. We hit, if let's say we are looking at H1, right? This chart that I'm drawing here, it's H1. Just look at it as an H1. H1 is going down, and then the price comes to hit H4 demand. Let's use support area, right? After hitting the H4 support area, look what it does. It's still on H1, right? But remember, this zone, the big one, it was spotted on H4. But here we are looking at H1, and then it gives us, let's say, 2 rejection bars like that. Someone can just buy them and put the stop loss outside. That's also fine. But sometimes you're gonna take that loss that you could have avoided. The same thing that happened with Nasdaq last night. Remember I said it's very, very useless for us to form a pin bar, only for the next bar to do this. It's like this does not exist now. So if we form a pin bar and fail to keep the momentum and go up, then it's pointless. So in cases where this doesn't happen, where we don't keep the momentum and the price still continues down, where now if you are using that concept, the pin bars, if you combine it with this, you're going to be safe, because the price is not going to activate your order. How I want you to trade this is that we got the pin bar, let's say 1 or 2, it doesn't matter, and then you feel like, oh, I think the price now, it has a higher chances of what? Of going up. Why do I say that? Number one, we have hit, remember, H4 support area, which is this, and again we're forming 2 rejection bars at the same area. So that's more than enough for you to say, I think the price is being rejected. So now it's only a matter of me saying, how do I execute now? Trader number 1, let's say we've got two traders, they want to execute the same setup. Number one can say that's more than enough, I've got enough reasons, I've got the pin bars, I've got the location, I can just instant execution and put the stop loss outside like that. No, that's trader number one. Trader number two will be like, hey, what if the next bar does that? Remember, trader number two is that one that's saying it's pointless for the thing to form pin bar and not continue with the momentum. So trader number two goes and does what? A just marks just up above the pin bar, or the pin bars if there are two, just above them, and then you put a buy, stop, and then the stop loss, they both put the stop loss at the same place. Their stop losses are here. So trader two, the advantage of trader two is that I'll show you the advantage of on both sides. Advantage of trader one. Trader one, agree, entered immediately, meaning he entered somewhere, let's just say somewhere there when the thing still closed, and then that's buy. That's for trader one. Trader two entered with the buy stop. So trader one, his advantage would be if, let's say, both of them, they are planning to exit here. If should the price go up to that TP, trader number one is gonna make more money than trader number two. If let's assume they both use the same size, lot size, because remember this one entered lower than the other one. So that's the only advantage that trader two is gonna have, which is what he's gonna make more money, slightly more money than trader two. Now, disadvantage of him is that should the price fail to carry the momentum and go down, it's gonna take a loss, and when that happens, that's an advantage for trader two. Trader one would have lost. That's the con of entering like this. Now let's go to the pros, or the advantage of trading with the buy stop when you see a pin bar at a significant area. So when you take buy stop, which is trader number two, advantage would be should the price fail to keep the momentum and go down, now my thing is not going to be activated, I'm not going to take a loss. That's the advantage of trading with that buy stop. And then the disadvantage would be what? Now, because I'm entering slightly higher compared to him, my stop loss is slightly wider compared to his. So meaning my loss might be bigger, and because I'm going up, because the buy stop is slightly higher than where he entered, that narrows my take profit working distance compared to his. So that's the disadvantage. But on the safer side, going, should the price fail to go up, now I'm not in the trade, I didn't take any loss. Why one? So you can pick which one you want, but I prefer this one, especially on this one works best on what? Nasdaq and volatility 75. I've never checked it on smaller time frames, but if you can do especially 15 until my H1, sometimes my H4, that might be too big for you again. So you can check it here, try and find these areas and then the pin bars, and then look at if I had put my stop order there, what would have happened, and then if I have entered immediately, what would have happened. So those are the questions that you ask yourself, and then with our honor, sometimes the buy stop will save you. Let me go to the chart. I hope this makes sense, guys. If it doesn't make sense, just make sure I tried and explained it slowly and giving all the reasons, so you can always watch the video again. So let's go on the chart, and then I'll show you the thing that happened last night. It was even on the thing, the analysis or the update that I made on Nasdaq. So I'll go there and show you if trader one entered like that, and then trader two, and then wanted to enter like this, it means one of them would have taken a loss, the other one would have been safe. So let's go to the chart. All right, here is our chart. Remember yesterday we had marked this stuff here. The price was still inside here, like it wanted to form a pin bar, but we said it's still early. We don't want to conclude that it's going to be a pin bar up until the price closes. And it didn't become a pin bar. It did this and moved to the second zone where it is currently reacting like we had predicted. Né? So now this is what I was talking about. Remember, this was a first area of interest. Né? So when you look at it on H1, look at this, and then we formed this on H1. So using the same rules, we can say we formed the rejection bar inside H4 or higher time frame, higher than what you're looking at, higher than the H1 that I'm looking at, higher time frame, a support zone, support area. So that's reason number one. You can see we're inside the support area, and we form the pin bar. So trader, remember we got those two traders. Trader number one, you're gonna be like, I'm seeing a pin bar which is located inside, and then I just go and instant entry. They go and enter immediately. This thing closed here, and hope that it will go maybe to the nearest area of resistance. And look what happened. The next bar just demolished all of that, and then he took a loss. And then trader 2, when he sees that inside the H4, he's gonna be like, I hope the momentum carries on, so I am just gonna point just slightly above the pin bar and put my buy stop. Should the price go up there, it means you have passed the highest point or the range of the pin bar, meaning the momentum now seems to be carrying over to the upside. So that's why I put my buy stop, and then both of them, remember, they put stop loss below the pin bar or just outside the zone. So trader 2, the price moved down. He did not trigger their buy stop, so they didn't take any loss because that trade was not active. But a trader 1, because they entered immediately and then the price went down, then that's when they took a loss. So that's why I'm saying both of them, remember there's a positive side and a negative side. So if the price had went from here and then continued there, and they both put their take profit here, remember what would have happened? Because the trader 1 would have entered lower than the trader 2. Trader 1, the take profit would have been much higher than the one here, this guy, which means trader 1 had a chance to make more than trader 2 slightly. And the negative side, another negative side here, trader 2 scoring, the stop loss is wider than trader 2, because remember, if you enter there and then we are both putting our stop loss there, it's bigger than if I'm entering here and then putting it there. The positive side here, trader 1 scoring, should the price fail to keep the momentum, I'm safe. I don't take any loss like it happened here. Trader 2 was safe and he didn't enter the market. The buy stop was not triggered, and then he's just moved to the next one. Remember, if this one violated, that's when I said we come to this one. You can see now we're currently reacting to it. So I hope the concept that I wanted to show you guys, it makes sense. And remember, you can always watch these videos over and over again until this concept again, until you get it right, then so that hurry move over to the next video, we are still on the same page. For those ones who are only discovering this as their video number 1, remember, we have been posting some videos in the past week or so, because this time the channel is still new, okay? So you can make sure that in your spare time, how now got data or Wi-Fi, whatever, you just watch them in that order, then you'll see you're not gonna miss anything. Whenever I make a new video, you are with me on the same page. So this one I'm gonna end it here, guys, and then I'll see you in the next one. I hopefully to tell you something, you've learned something, and then don't forget to give me a sub, guys. Just subscribe and hit that bell icon, and also the like the video. I'll see you in the next one. Sharp.